The S&P 500 bottomed in October 2023, and now, 12 months later, the index is up over 40%. The question is, how did this happen? Well, by leveraging bullish chart patterns, of course. So today we're going to talk about how it started, where we are right now, and most importantly, how the S&P 500 can continue this run going forward. And so 12 months of pattern breakouts. It's pretty impressive. So why do we care this much about it? Is because you cannot have an uptrend, whether it's a few months to a few years, without this working. And a lot of other factors come into play as well, like the state that the market has to be in for patterns to work. Talked a lot about how you have a low frequency of 1% moves. You have to see the S&P close near its highs or at least above its midpoint most of the time as well. And also you need to see bearish patterns fail. So all that means is digestive phases tend to be resolved to the upside. And when that happens over and over again, we get the uptrend like we have right now. And so let's talk about how this all started, going back again last year. And this chart is from November 10th, 2023, in a piece that we used it in, again, almost about a year ago. And so at the time, the rally had begun, of course, with 4 1% advances in 5 days, starting on October 30th, all the way to November 4th of that week. So it looked impressive, of course, but didn't look too different from the failed bullish patterns that we saw take place in September and October. In September, we had a potential cup and handle pattern here, but never even got back up to the resistance point which it needed to get to, and of course break through. And it happened again just a few weeks later, another cup and handle pattern where spending numerous days trying to bust through that never worked. And of course, the bottom fell out and we had the final leg of this 3-month 11% downturn. So when we had the initial burst, of course, it created a lot of those breath thrust readings and a lot of fireworks, but in reality, nothing really changed from a chart perspective because you're still potentially making lower highs. You're still in this area where it gave the S&P 500 a lot of trouble just, again, in August and September. So there was a lot of doubt in the system. It looked like just short covering potentially, and the worst case scenario was that this was going to eventually roll right over. But with every bullish formation, or really bearish formation for that matter, as long as we have a breakout, we have to respect it for as long as it lasts. So if this were to fail and come right back under this area near 43.75, it would have been negated. But we know that didn't happen. So this is a close-up view of the same bullish pattern, again, in a 2-hour time frame. You can see the right shoulder a little bit clearer here, and we can see how high this upside target would take us. Again, we're above the July highs here from that summer, which, again, not a lot of people thought was going to happen. But we know what happened next. That was the beginning stages of something that has now lasted for 12 months. And so how's it going now? This is how it's going. This was the first bullish pattern we just showed right here. Right? Remember that huge upside target? It doesn't look too lofty right now. And that just led to more of the same, where we've had now 9 successful bullish patterns, meaning that we had the breakout was negated, an upside target was hit, and still have 3 additional upside targets in play right now. So again, this is what it looked like there. It looked scary if you were a bear, of course, but it just didn't look like something that had a chance of playing out considering the attempts that failed in the prior few months. But in hindsight, of course, it looks relatively small and easy to achieve something here. But again, at the time, it didn't look like it was that low on the chart. Sometimes it's just optics, right? And so if we talk about successful bullish patterns, what has to happen for one to actually play out? Well, there's a number of steps. Number one, the index or stock just needs to stop going down. Sounds easy enough. Sometimes there's support there and that support holds. Sometimes the support level is just sliced through if you have a very aggressive sell-off. And many times there's really no near-term support to key off of. And when that happens, we always talk about the market being in support discovery, meaning that at some point it will just stop going down, and at that point is going to be the area that will then becomes new support. Most recently, it was that intraday low on August 5th, right? It was obviously a very treacherous open at that point, and market just went on turn on a dime, that's been the line in the sand going forward. So when you have the ability to at least hold or stop going down, you need to see some upside follow through after that, because without that, it's just a dead cat bounce. And then number three, after we have that upside follow through, there's going to be some sort of pullback along the way. And if that produces a higher low, that presents a change of character in a previously declining market, and also is the beginning stages potentially of a bullish pattern. So next step, number four, construct a bullish formation. So that could be an inverse head and shoulders pattern, that could be a cup and handle pattern, bullish flag, bullish pennant, what have you. And of course, right after that, number five is break out from that pattern, of course, cleanly without seeing the breakout zone violated, hit an upside target. And the most important part of all this, of course, is number seven, which is repeat steps 3 through 6. Why 3 through 6? Because again, we've already broken out. We've already had that follow through. At some point, the market is going to pull back again, and we need to see another higher low form at that point, and then that could be the beginning stages of the next bullish pattern. And again, we see all that playing out here over the last 12 months in the form of all these being constructed along the way. Now we know we had bigger pullbacks in the springtime and the summertime, but each of these then produced even larger formations, right? And that's really what happens when you're in a strong long-term uptrend like that. And so that brings us to right now, the current state of patterns. We can say this started a year ago, but we know that the bottom, the real bottom, was in October 2022, so 2 years ago. And we've been talking about this on videos and many times in our written pieces, is that from our perspective, things didn't really change in the middle of October 2022. It was just another strong move higher off the lows. When things started to slow down in terms of lower two-way volatility, that didn't happen until the second quarter of 2023. And we can see that's when bullish patterns really started to work. And so, yes, it wasn't the low, but that's when a more consistent uptrend began to take shape. And again, that all was because bullish formations started to be successful. And so right now, using our pattern grid that we show every morning in our opening look piece for premium clients, and we have 3 upside targets still in play. Again, these have been now with us since the middle of September 19th. We got that breakout through 56.50. So now we're about 3% above that area. Now, it hasn't been a huge move, of course, talking about 3% in over a month right now, but that's really the key to this as well, as we talked about before. When you have an uptrend, you typically don't have a lot of big moves. In fact, if you go back to September 19th, we've only had 2 1% moves the whole way, one up, one down. And so that's obviously much different than when we saw in July and August and even in September. And so once you break through a certain zone like that, that's what we want to see happen to maybe get back to what we had seen from the beginning stages of this rally from last fall into the new year. So let's start with the weekly pattern. And of course, this has been in place since the middle of January of this year, and that produced which looked like an extremely lofty target of 6,100. Now we're about 5% away from it. So as we have discussed before, the best part about this breakout was that we had an immediate upside follow through, which then allowed the S&P to extend from that breakout zone and allowed it to really digest some moves going forward in the form of these 2 relatively strong volatility events we saw in the springtime and summer. And so we have these highlighted here, not only to show that these are the biggest pullbacks along the way, but ended up producing some of the biggest substantial and strongest bullish formations and subsequent breakouts, right? And that's obviously what then gave us the ability to rally even more. Now, the most recent one looks at the action, of course, in the summertime, and really there are 2 different bullish patterns in here. The first one being this one, which takes into account the end of August and the beginning of September, that produced an upside target of 5,900. The S&P got relatively close to achieving that back at the highs just about a week and a half ago. So still within reach, of course, right now. And the much bigger one looks at all the action from the big pullback from July to August and the higher low in the form of the market pulling back in early September. And that has an upside target of 6,180. So again, there are no timetables on this, just realizing that we have 3 upside targets in place and there's been no indication of a bearish formation taking shape just yet. And again, we sometimes see that first on a very short term, and then obviously if things are much more dangerous, we'll see that eventually materialize across daily and weekly charts as well. And so what's next? How can this possibly continue? Again, depending on where you measure it from, we could be in a 2-year uptrend or a 1-year uptrend. So what needs to happen going forward? Surprise, surprise. We need more bullish patterns to work. So in terms of looking for these, it's going to be different week to week. But as of an example right now, with the market having pulled back from its high, not by much, but this could potentially set the stage for the next one. As we can tell here, this could maybe be a head that just formed. And if we go up and test the highs and come back down again, then in a higher low, and this could be the next inverse head and shoulders pattern. Or it could look completely different. It's not really up to us to decide what it should look like or what it will look like. It's observing what the market gives you, looking at the price action, how the formations get constructed. If we have a clean breakout, if the upside target gets hit, and most importantly, have that process repeat once more. That's it for today. Don't forget to check out these videos and subscribe. And I'll talk to you next time. Thank you.